Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Good morning, February 11th, USDA report. Welcome to this week's edition. Right off the bat, let's get it pulled up and let's talk about the recommendations. And I'll check the box in just a minute, but there is no action recommended on this USDA report day. That's not to say, all right, got the screen up there and let's check the box. No action recommended this week. Another way to think about that is we are just going to be holding our positions. We're just going to hold our positions and we'll go through the rationale behind that. We'll go through just kind of paint a picture for that. But we've got positions on, we've made sales, we've had prices, corn around these price levels for some time. Are we going to get that breakthrough where we move through the $5 pressure and then we get higher prices? Hopefully, we'd love that. I have my doubts. And then soybeans are down here just hanging on by a thread. Do you think they'll make a move up? Yes or no? So we're just going to go through all the details and get into that. But first, let's take a look at what's happening with the crop in South America. We are almost, well, let's just look at it. Let's look at the numbers. So let me get my marker up here. This first image that I want to show, we'll get a blue color here. This is soybean harvest in Brazil. So what we want to kind of compare is that's the February 9th. That's the week of this report compared to last year and then compared to last week. How much progress has been made. So first of all, big picture numbers, there's been an increase of almost 7% between last week. That's how much harvest has gone. Harvest in Brazil is still, if you think of this, it was 21 and it's 15. It's still about 6 percentage points behind last year. In all fairness, harvest last year was a little bit faster, but even if you look at a 5-year average, the big takeaway here, I'll make this in green, is soybean harvest is slow. That's not to mean it's bad necessarily. Ran out of screen there. Not to mean it's bad, but it is slow. And that the natural consequence there is not necessarily a change in yield. I think for the most part, Brazil will have what it has, and we're less concerned with yield, but it has slowed down double crop corn planting. That's the next image that I want to show. We'll get our markers up here. get this in red. So last year, at this point in time, 31.5% of the safrinha, that's the double crop corn, was planted. We're under 20% this year. It is important to note that this still, how am I going to phrase this? They're still not delayed. Like this planting is not out of the window. You can have really good double crop corn planted even the first week of March in most of Brazil's double crop corn belt. But when you, I mean, they're not even 20% planted, and the 1st of March is not that far away. So are you going to get 80% of the crop planted in the next 2-3 weeks? It's not impossible. You can put a lot of corn in the ground. And again, remember, this is a double crop. So a lot of these operations have machinery. They just use, the same planters. They'll just kind of retool the planters. So they have the firepower, so to speak, from a machinery standpoint. They have the firepower to get in that double crop corn. Just to put it to numbers, let's say that you only plant double crop corn on 30% of your area. Well, you've got plenty of machinery to put that in. And you don't have any of the, like the US, maybe use the same planter. A lot of people have 2 different planters, but you have to retool it. You don't have all that. They've had the whole growing season of beans to be ready to plant corn. So there's plenty of firepower from a machinery standpoint to get that corn in and to get the corn in fast. Weather needs to cooperate, and we really need to just see lightning fast corn planting over the next weeks. I mean, last week was good, right? They planted 13% of the double crop corn. That's not bad. If we can get 20% planted every week in Brazil, then you got this week, so that you'd be at 40% this week, then you'd be at 60%, and then 80%, and you'd be done in the window. So if they can plant 15 to 20% of the area per week, they can finish in time. But let's see if there's no room for hiccups, I guess I would say now. I think we got the rally. The corn planting in Brazil is delayed rally. I think that's what we've seen. Will we get an additional rally on top of that? That's a great question. Next image, we always want to go over that pyramid. So the base level of the pyramid is a tailored custom market plan portfolio. Then the mid level is what we're going to go over now, which is funds, seasonalities, technicals. That's what we're going to go into. And then the action. So this week, make no mistake, no sales recommendations were made. That doesn't mean it's not an important week. I think that basically there's a tug of war where beans are trying to pull corn down and corn is trying to pull beans up. If you look at the ratio between those, they're right there at that extreme to where I feel like something kind of has to give this week. That's more of a gut feeling. We'll look at the technicals in a minute, but if it breaks, then what I'm going to be looking for, maybe let the dust settle a week or two, depending on how it is. If it breaks, then I want to pick up some re-ownership on beans before the battle for acre, and we come into planting in the U.S. Probably, get out of some of our short positions on corn and maybe even flip those to longs. And there's a bunch of strategies we can use. And if we get that breakthrough in the corn and that pulls beans up, we could get speculative buying. We could really have beans take off. So I do think it's an important week. I think this is a report that, not necessarily historically, but I think it might be a report that pushes us one way or the other, just because we've kind of had this mounting tension where is corn going to really be able to pull beans up, or are beans going to pull corn down? But we got to see that, let's let the report come and go and hold tight this week. Let the dust settle on the other side of it, and go from there. All right, so let's jump into the funds and the technicals. Get the markers up here. I think blue would be a good color to mark up this corn chart. So let's move that to blue. Got that on blue.
This marks the 7th consecutive week that spec funds have increased their position. Clip those off. Wow. It's also important to note that at these levels, well, I might have drawn that circle a little bit too big, but at these levels, it's worth selling, because it's as if markets were artificially high. Spec funds have bought so much that they're all on the sell, they're buy, this euphoria, corn's going up. It's as if markets were artificially high. So at this level, it's not that funds can't continue buying, they can, but a lot of times this is where they'll kind of catch their breath, and we'll see those funds come out of the market. We'll see the market fall off temporarily just while they say, hey, maybe I overdid it a little bit. Maybe we're not ready for 530 corn or 550 corn. Maybe we need to catch our breath a little bit. Since the only weather risk we have is what we talked about, the delayed planting in Brazil, and that big bad headline we already got. So either it's actually going to be delayed, which will be a slow playing story until probably a month from now, or they got caught up in Brazil and it's planted on time. So the headline, corn planting is delayed, we got to rally off that. Will that continue? I have my doubts. But for this week, speculators are still excited about buying corn. That's good, or I guess I should say last week. What I wanted to point out on the technical side of the corn is actually, in my opinion, very interesting. And this, for me, is optimistic. Not necessarily short term, but longer term. This is the December corn contract, and we've kind of been dragging our feet before selling too much December corn. We got a stake in the ground, but we haven't been too aggressively. This right here, what happened in Monday's trade, is a key reversal, which means in the same session on the December contract, you took out the high, the low, and you closed up. Let me move this bar down here to the bottom. All right. For me, this is telling me, okay, there is not very much selling pressure at 470 on new crop corn in February. If you want to buy new crop corn and you're going to, pay 470, we're going to have something more to get out of that. That is very good news, in my opinion. And what's that number? I don't know. But if I were to just take a stab at it, I'm guessing if you got up here, if you got corn prices 480s, 490s, yeah, I'm guessing there's going to be a lot of farmers layering into pretty significant averages, because I'm guessing if you lock in a 480, 490 corn price, you can pencil out your numbers. So I think that the December contract, between now and planting season and the selling season, my hunch is we'll probably get an opportunity to sell at least a few times, at least once or twice, I'd say. We'll probably get a shot at upper fours from a pricing standpoint. And no action recommended. Well, maybe it'd be nice to lock in 470 corn. Maybe so, but it's February. If there's any hiccups, I don't think it's beyond the realm of possibility that December corn contract makes a run close to $5. It did last year, and last year the speculators never even got long. You have to remember that for let me draw this out here. Okay, so in November, basically, this shows up even more clearly on the other chart, but basically, like in here is when speculators started buying the corn market. So the speculators' net long position started about right here, and it just increased. So they've bought here, they've bought here, they've bought here, they've bought here, they've bought here. They've basically been buying this up, and they increased their position, which means between last week, there's people that have been buying here, right? Speculators that are buying at this price level. As soon as we got this golden cross, there's quite a bit of optimism around this corn market. So my hunch is sometime between now and the end of the selling season, we're going to be able to lock in corn closer to $5, and that's why I'm not excited about selling new crop. Old crop's a little bit different story, and I want to point out the March contract because that's kind of the most obvious one. Once we got to that, we get the black up here. March corn has actually not even tagged $5. We got over $5 on the May and on the July. March corn could not even make it to $5, and it has selling pressure. Now, maybe we get this report, maybe this 20-day keeps going up, and maybe corn goes up, but we don't have that much time left on this March corn, and that's a pretty heavy resistance where I just think this is farmer selling, right? This is farmers saying, hey, I'll take 480, I'll take 490, I'm happy with that, let me move this corn. It's a whole lot better than I thought it would be, and there's just a lot of selling pressure on top of this market. So what's going to give? Because the other possibility is this March contract breaks, and then the good support we'd have is down here at this 200-day. I think we need to look at the bean market to make a little bit more sense of what direction this is going, or at least think about it. All right, so we want to start out here. Let's get a color, maybe yellow. Over the last months, speculators have started buying soybeans. That is encouraging, and they've actually held their bought position. So speculators are long in soybeans, and they're stepping into this report unless they adjusted it since. They're very likely long and about the same size of long, right, that they've been. But as we look contract by contract, I want to point out 3 contracts for the beans. And let me get this marker in black. First is the March. If you look up here, the March, I'll underline that. And this is the 20-day moving average. We're starting to trade under it. So that's a little bit of a sign of weakness in the March contract. The second contract that I want to point out, X out of that, the second contract is the July. Get the black marker up there. It's still in an uptrend. The question is, will this 20-day moving average do one of those where it fails and then markets trade down? Or will we get that, it goes like that and then we get that golden cross and it goes up. The best way from a decision-making standpoint, where if you follow the recommendation and you had Q4 beans, you're actually long this contract and you're long right about in here. It's probably a little bit nerve-wracking ahead of a report. But the way that I think about it is, if this bean market gets absolutely punched in the gut, it's not fun to be long in a downward market. But at some point in here, we've got a lot of dry powder to average into this. So drop our average price down to this and then wait till we get back in an uptrend. And if this thing takes off, we're just going to wish that I don't think it's going to go a little bit. I think it's going to really go. We're just going to wish we had a lot more bought. So I think having the long position that we do, the only thing that I'm halfway concerned about is Q1 bushels, which we still have a little bit of time, right? But Q1 bushels, if we were to just get absolutely destroyed here, should we be selling Q1 bushels? That was the decision that was the hardest for me. But you have to realize that what happened to basis is it just plateaued. So if we are to get beans just absolutely tanking, I don't expect this to be a sell-off that never comes back. I expect some degree of a V recovery. So if bean market goes down, if it just absolutely gets destroyed, chances are we'll see an uptick in basis. So at that point in time, we can move our cash inventory, pick up something on paper and be better. And if beans go to the moon, great, we'll just have higher priced beans to sell. And, bummer, should have bought more beans on the way up, but who's complaining about a winning position? We obviously want prices to go up, but the reason that there's no action recommended is because I actually feel like in all of the aspects of our portfolio, let this report come and go. If it's sideways, chances are it'll be sideways to higher over time. And if it gets a real brutal sell-off, if for something happens and it really just gets hammered, over the next week or two, we'll probably see basis levels improve, and we've got some dry powder to, bring down our average buy-in on Q4. If our basis improves, we'll move more Q1. So, and again, that's the last thing is the new crop, and I wanted to point out the new crop here. That's the final image. New crop is actually still pretty strong. It kind of looks like the July contract, and I'll be surprised if sometime before this growing season we don't get on this new crop contract, we don't get that golden cross where it's the 20-day moving average moving above. So that goes up, something like that. I'll be surprised if we don't get a move up in beans. I don't want to understate how much the winter rally, the January rally, how much potential that added into the spring prices, in my opinion. I don't think that it'll be kind of, that was all we got for the year. I think that was a warning shot. Speculators are willing to buy it. I think there's some inflation concerns. I think there's some geopolitical concerns. Battle for acres, that'll be a big headline over the next, it already is, but even more so as it'll just escalate throughout March. And then we still got to raise a crop in this country. So there's a lot of headlines ahead of us. What I would say about double crop corn, I kind of downplayed the fact that they had delayed planting, but I do think it's important to realize that we don't know the weather, but when every day that you delay planting, so even if they get caught up and even if they plant in the window, if they don't plant in the window, one of two things will happen. They have yield potential loss or acreage reduction. And every day that you potentially delay, the way that the double crop corn works is they just barely get enough rain. So that last rain is basically like, pollination, they hope they get a last rain that kind of pushes them over the edge to where they'll be okay. That's how the double crop corn crop works. But if you miss that last rain at a critical time, a lot of times it's like you're off by a week or two. Man, if that rain had come 2 weeks later, I would have been over the finish line with a decent yield, but it just got absolutely destroyed. So it does make a difference historically if you plant February 10th or March 10th, even if both are technically in the window. It's better to plant your double crop corn earlier because it gives you a better shot at higher yields. So I'm not downplaying the fact that we could still have a weather story in Brazil. I just am saying that the headline that we got, the scare that we got, I think that's somewhat in the rearview mirror. Either way, USDA report comes out. And we'll watch the session. Let me know if you have any questions, any concerns, and if not, we will hopefully hope for higher prices on the other side of this USDA report. But regardless of what markets do, we'll react and adjust our portfolio and keep going. Have a great rest of your week and a great day.